One of the proudest milestones in a person's life is owning their first home. The joy of walking into a house and saying, "Yes, this is mine," is priceless. No landlord, no rent hikes, no awkward notes about "please don't paint the walls purple." But let's be honest, buying a home in the modern West is like chasing a unicorn. Unless you were blessed with inheritance, or you hit the lottery jackpot, or you sold an app to Google, most people cannot possibly pay cash for their first home. And so, the humble, weary, and hopeful majority turn to that financial invention that has trapped generations, the 30-year mortgage. That's 3 decades. In some countries, that's longer than the average marriage. The bank says, "We'll give you money now, you'll give us more money later." Now here's where the plot thickens. For Muslims, and in fact, for many faiths throughout history, interest, or usury, is not just a bad financial deal. The Quran, in chapter 2, describes those who consume interest as rising on Judgment Day like people driven to madness by Satan's touch. Imagine a financial horror movie, only it's not fiction. So the dilemma is clear. People need homes. Homes require money. But interest is forbidden. What do you do when the world's financial system is built on something your faith calls unjust? This is where halal mortgages step in. Ingenious alternatives that allow families to buy homes without paying interest. Let me walk you through the big 3. First, the murabaha, also known as cost-plus financing. Here's how it works. The bank buys the house for you, then sells it back to you at a higher but fixed price. You pay in installments, no surprises, no fluctuating interest rates. The bank makes a profit, you get your home, and everyone sleeps a little better at night. Second, the ijara, or lease to own. The bank owns the house and you basically rent it. But every rent payment chips away at ownership, slowly, steadily, until the day you hold the keys fully in your name. It's like renting, but with an exit strategy that doesn't involve moving boxes every year. Third, the musharaka, or partnership. You and the bank become co-owners. Each month you buy out a piece of the bank's share while paying rent on what they still own. Over time, the bank fades out of the picture, and you stand proudly as the sole owner. Now let me be straight with you. These halal mortgages are not fairy tales. They often cost more than conventional mortgages. Why? Because banks are banks. If they're not making money through interest, they'll find a way through pricing. And in many places, the options are limited. You don't exactly have 5 halal mortgage lenders on every street corner competing for your business. As an economist, I'll tell you, interest has fueled global growth for centuries.